What's happening, guys? Jas Takhar with my boy Simeon. What's up, Simos?
Hello, Jas. Hello, audience. Hello, everyone. Happy days.
Shooting REC Insights right now. For everyone who's watching or listening, guys, do us a favor because we're always trying different things and seeing which formats are best. Please leave a comment below. If you're watching on Facebook or watching on YouTube or Instagram, leave us a comment. Let us know other topics that you would want us to discuss on REC Insights. This is all real estate related.
REC Insights, how to help you get through your next transaction, how to help you save money on your next transaction. Don't make that mistake somebody else has.
Yeah.
We transact hundreds on hundreds of deals per year. This is your chance to learn from other people's mistakes.
Yeah, and so make sure to leave us a comment. Let us know if you like the format and any changes we can make. So today's insight, buddy, closing costs, money that is needed, how does it get transferred, when do I need the deposit, and all that kind of stuff. So when someone purchases a home, and we're talking resale here,
yep.
You need to make sure that you have a deposit, because that's what kind of finalizes the agreement of purchase and sale. There has to be some type of
any contract consideration. So
right?
A contract is made out of certain critical points.
Yeah.
Consideration is a vital one. If there is, so when you see a contract with a $1 or $2, that's called the consideration. In order to consummate any contract or agreement, there has to be consideration, and that is typically your deposit.
Your deposit, and we're going to talk in the Greater Toronto area. You're essentially going to need about 5% of the purchase price. And the reason is because the seller's not going to take you seriously in the city of Toronto, where obviously we're having a huge supply and demand issue, where if you come with less than 5%. Does it work? Does it happen? It definitely does, but very, very rare. But that's your deposit. That's going to be needed 24 hours of acceptance of the offer.
Or herewith.
Yes, herewith, when you actually put the offer in. That's different than the down payment, okay?
Yeah, so the down payment is talk for the bank.
Mm-hmm.
The down payment is how you're going to facilitate and close on the transaction. So whether you're approved with 5% down, your deposit could be your down payment.
Yeah.
But the actual down payment itself is when it comes closing time, what piece of the equity are you putting down on this piece of real estate versus what you're borrowing?
And now, if it's a 15% down payment, or as an investor, you have to put down 20%. Minimum 20%. You've already given the 5%, so on closing, you're going to give the remainder of the 15%. Yeah, we're not done yet there with money that is owed. You have closing costs.
Not even close,
right?
So the difference that you just referred to, that is where, so when you go to your lawyer, to close on the transaction, to transfer title, basically what's going to happen is you're going to have a statement of adjustments, a ledger of adjustments. This ledger of adjustment is going to contain the difference between your deposit and the actual down payment. It's going to have the balance that you're borrowing, whether it's one of the major 5 banks. They're going to instruct the lawyer that the funds are ready to be transferred. So on the one side, you have the purchase price.
Yep.
On the other side of the ledger, you have the adjustments.
Now, with the adjustments, what that's going to also include is actually closing adjustments. So, for example, if the seller of the home that you're going to be purchasing, if they paid the property tax for the year. So let's just use, we're closing June 1st because it's in the middle of the year. Then you're going to rebate the seller for the remainder of the year.
On a per diem basis.
On a per diem basis.
And that's gonna include
property tax,
your property tax, your insurance,
maintenance fees,
insurance if any, rental adjustments. So let's say you're buying a duplex and there's an income suite at the bottom. Rent has to be adjusted. Deposit of the rent first and last has to change hands.
Yeah,
this is all part of the closing cost. Well, this is all part of the adjustments.
And I just want to talk a little bit more of the adjustments because it goes right down to the micro of even the month. Like in Ontario, it's known that we do we rent our hot water tanks. I know everywhere else in the country they buy them, but in Ontario, I don't know why somebody did it years and years ago, and so
it's a scam.
Everyone kind of just follows suit. So if you're closing in the middle of the month, but the maintenance fees and the hot water tank were paid at the start of the month, you're going to have to rebate the seller on a per diem basis the charges for the hot water tank and as well as the maintenance fees.
Yeah.
So what else do we have left on closing costs?
Well,
lawyers' fees.
I think we never touched the big one. So, I mean, we went in kind of into the micro of it.
Yeah.
What to expect to see on that statement of adjustments.
Mm-hmm.
But the big ticket items that sometimes people forget are the land transfer tax.
Yeah.
The double land transfer tax that's
So
imposed on people inside
So
the Metro
Ontario,
Toronto.
we have provincial land transfer tax.
Ontario land transfer tax.
Welcome to Ontario tax.
Yep.
And then you talk about the double one. Welcome to
The city of Toronto.
there's a double tax. If you're a first-time home buyer, though, okay, you'll get a rebate, and that gets all worked out at closing with the lawyer. But we're thinking if you're an investor, you're probably looking at your second or third property. If you're moving up into a home, you're going to be paying both taxes. Now that can all of that as well as the lawyer's fees. Remember, with lawyer fees, I want to make mention though really quickly that if you Google lawyer's fees, you'll generally see $700 to $800 when you're purchasing a property, but they don't tell you about disbursements.
Yeah, that's the legal fee.
The legal fee, but the actual disbursements every time they fax something. Yes, they still fax things. Email,
Title insurance. Actual closing of moving the transfers. There's some government fees in there, of course. The government will always take a little piece of every single thing that exists inside the transaction.
Yeah.
So above and beyond the land transfer tax, above and beyond the City of Toronto tax, above and beyond your legal fees, there's the disbursements of the mortgages, registering mortgages, etc. That's what those are.
So you're probably looking at about $1,800 is generally what we quote, $1,800 to $2,000.
It used to be $1,200 to $1,500. Now I would definitely say it's closer to $2,000.
$2,000. That's fees and disbursements for the lawyers. Yeah. So to recap, closing costs will be lawyers' fees, land transfer taxes, and closing adjustments. Now, we should quickly talk about, there's other things as well, like in case, if you're moving or I'm moving, we generally help each other, or we get a couple of guys together and get some pizza and beers. You might want to calculate that if you're some moving expenses, moving truck and moving guys. Anything else that you can think of?
Well, if we did resale specifically.
Yeah.
If we are going to touch, not pre-construction, but new construction, because we're talking about closing adjustments.
Yes.
So if you are buying, if you are buying a new home, there are significant differences, and those differences on closing are going to be the main component will be the HST. Yeah. That may or may not be applicable above and beyond the purchase price, because if you're an end user, the price that you pay for the home is the price that you pay on closing. If you're an investor, there is a separate HST component, which is significant. Yep. Anywhere between $20,000 and $30,000 is the range. And it does come out of pocket.
Yeah, and you got to make sure that there's no surprises.
You do get reimbursed within a year after you produce the government proof that you created housing.
Yep.
So you do get the majority of it back, not all of it.
Yep.
But as an end user, you don't have to worry about HST. As an investor, you do.
On new homes, you're going to be doing extra closing costs for development charges,
education charges,
carry on home warranty. All this can be an extra approximately, aside from the HST for a second, it could be easily an extra $15,000 on a new home. So you want to make sure that, again, we keep on saying it, you don't want any surprises. Other than that,
I think that's
it for my new home.
I think this is a good checklist just for people to kind of know that it's not as simple as one may think.
Yep.
Nothing is hidden.
Yeah.
I don't want to call them hidden charges. Yeah. But it's not common inside people's wheelhouse.
Right. And
to think of development charges. What are you talking about?
And sometimes it's not explained.
What are you talking about education?
It's not explained up front, right? And so then when you come to closing, how many times we've seen, I don't have the money. I wasn't told about this. So we want to make sure that you have all those monies in place way ahead of time, so then you don't run into any surprises.
Agreed.
Guys, leave us a comment if there's something that you didn't that you need clarification on. Just leave us a comment. We'll make sure that we get to you guys. Facebook, Instagram, obviously our YouTube.
I ask every single one of you to take a moment. Please subscribe to the channel. Yeah. Every single day there is content inside this studio being created, and it's always thoughtful and it's always done for you, not for us.
Love it.
So everything that we can do to share is what we do every day. If you have ideas, as Jas said, please, if you need clarity on something, let us know so we can cover it right away. From the REC Studios, adios.